From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming November 21st Forex session in the euro dollar currency pair. As you can see, it did have a strong showing on Tuesday, and we managed to close above the 128 level for the first time in a couple weeks, really. So, having said that, it does look like we are trying to break back into the previous consolidation area, which was roughly 128 to 131.50, a nice large area. With all this being said, though, we feel that this area here needs to be overcome, and for lack of a better term, I will call it 128.50. We need a daily close above that, and with that being the case, it's it's going to still need a little bit of juice to keep going higher, but there are some things to look at and perhaps say in its favor. This is the 200-day simple moving average. It's a average that's used by longer term traders, and you can see that we have acted as support a couple times. Resistance once, support here, and now support here. So it looks like we could put up that fight. The entirety of the move, we've retraced roughly 50% of it. So that's a fight as well that could be made in favor of the euro. With the fiscal cliff issues going on in America, we think more than likely the Congress is really bailing out the euro more than anything else. There's a little bit of a risk on rally as well. So, in an odd kind of way, we have a risk on rally, which of course is anti dollar, it always is, and an anti dollar rally in the sense that people are worried about the fiscal cliff. Ironically, though, if the Americans do go over the fiscal cliff, this pair will crater. People will buy the dollar. The reason being, of course, that they will buy U.S. Treasuries. So, we have a lot of potential for a whippiness and back and forth type of action. But if we get over the 128 on a daily close, 128.50, I should say, I firmly believe that we will try to continue higher and grind back towards the top of this consolidation. That being said, however, with as volatile as this pair has been, I do suggest that perhaps tight stops are in order. If we manage to break down the bottom of this hammer right around 126.50, this pair really could let go, more than likely predicated upon some type of bad headline.